Welcome to In It to Win It. This is Steve Barton, and thank you for tuning in. We are back with our resident commodities guru, Rick Rule. Rick, thanks for coming back on the show.
Steve, always a pleasure. I enjoy these conversations, and I enjoy the opportunity to visit with your audience.
Yes, we enjoy them as well, sir. The pleasure's all on this side of the table. Okay, you've got a royalty and streaming boot camp coming up. As a serial attendee of your boot camps, I love for $99. There just absolutely is no better value. What can we expect for this next boot camp on royalty and streaming?
I would suggest that royalty and streaming companies are probably the lowest risk way to participate in extractive and natural resources industry. For those of your listeners who need the words defined, a royalty is an economic interest in an extractive deposit where you get a piece of the revenue without bearing a share of the cost. You don't have the sustaining capital investment, you don't have the capital investment, you don't have the operating cost. You just have a revenue stream. A stream is different. A stream is the ability to buy some of the output from a mine or an oil well at a fixed price without bearing the cost. These are financial interests rather than operating interests, and as such, expose you to much less risk from, as an example, cost creep or capital reinvestment. An argument can be made that for many investors, establishing a natural resources portfolio just around royalty and streaming companies, large ones, mid-scale ones, and small ones, is probably the lowest risk way of establishing a natural resource portfolio because you don't have any exposure to the operating risk. But interestingly, despite the attractiveness of the sector, the investment community, at least many aspects of the retail investment community, are unaware of the fundamentals around royalty and streaming and unaware of the techniques involved in establishing a portfolio around royalty and streaming companies. You will know from prior boot camps that the idea of a boot camp is to delve fairly deeply into a topic, a specific topic. We're not talking global macro here. Previous boot camps included the uranium boot camp, the silver boot camp, and the electric and battery metals boot camp. The format is 8 to 8.5 hours, one day, with the accessibility of the tapes for 6 months to refresh your memory for those facts that might have escaped you during a very intense 8 or 8.5 hour session. The royalty and streaming boot camp will be no different. Our keynote speaker is Doug Silver, who many people suggest in effect invented the independent mineral royalty sector. I've known Doug now for 3 decades, and I actually postponed the boot camp due to his unavailability on an early date, which is how highly I regard his expertise. In addition to having Doug Silver, who has an encyclopedic knowledge of royalty and streaming, who will do, in effect, the introduction to royalty and streaming, we have other absolutely world-class analysts around royalty and streaming, and we will have 6 public companies as, quote, exhibitors or sponsors, all of which are owned personally in my own portfolio, from great big royalty and streaming companies, names to follow, all the way down to junior royalty and streaming companies, companies with great promise in my portfolio that are mostly unknown to the investment public. Sorry for this long-winded commercial, but one final thing. Anybody who comes to a boot camp or any of my conferences enjoys an absolutely gold-plated money-back guarantee. If for any reason you don't think that you got your $99 worth, email me. I'll give it back. Now, I must say that there will be fine print this time. We have one person who has now attended 3 boot camps and asked for their money back each time. This is called a free rider. So you will see something that says, if you have requested a refund from a prior rule investment media product, you may not attend this boot camp and you may not request a money back guarantee. It's important to know that in 30 years of sponsoring investment education products, I've had to refund less than 0.1% of the subscription revenues that we have enjoyed. Nonetheless, Steve, there's an absolute gold-plated money-back guarantee. If you go to the Royalty and Streaming Bootcamp and you think for any reason that you didn't get your money's worth, I'll give you your money back.
Awesome. I look forward to it. October 21st. Can't wait. That's a Saturday. Your little story about the guy asking for it reminded me of when my dad used to do Crash and Derby, and he would always read through the fine print. And one of the first modifications he did was he replaced the stock bumper with railroad ties, changing the rules the following year that you have to use the stock bumper. And then the next one was he moved the radiator from the front of the car and put it in the back so that it was less vulnerable. Changing the rules again, he modified the tires and put big old steel wheels with mud flaps on them, so he got a lot of traction. Changed the rules the following years.
Well, I hope I only have to change the rules once.
Yes, I hope so too. Okay, so speaking of royalty and streamings, we got a lot of questions, probably the most asked on Gold Royalty Corporation. They recently suspended their dividend in order to acquire a mine down in a producing mine down in Mexico. What are your thoughts on Gold Royalty Corporation?
Gold Royalty was a company that in terms of market capitalization was ahead of itself. I love the people behind Gold Royalty. I've known them for many years. Amir Adnani is a coming financial superstar in the mining space. But the truth is that the stock was overpriced. Amir has established a cult around himself as a consequence of spending literally millions of dollars in financial public relations. And he's done a wonderful job lowering his cost of capital. Given that I supply capital, somebody with a low cost of capital is less attractive to me. The dividend cut and the fact that they have acquired other royalty companies, the fact that the stock has fallen in price at the same time that many of their royalties are now in the development stage, means that the company is becoming attractively priced. Okay. A combination of the fact that they've been able to add value in the company for some period of time, and the fact that the share price has declined, a wonderful conjunction of circumstances for a guy like me. People say the story is broken. I love a great story that's broken if it allows me to get a bargain.
Yeah. Okay. So you're not concerned about the dividend being suspended because now we got the producing mine, and I think Cote is coming online Q1 of next year too.
Cote is coming online, which I think will make a big difference.
Okay.
And I mean, they now have 12 development stage royalties, as I understand it. So what you're going to see, not so much in 2024, but 2025 and 2026, is an explosion in free cash flow. The company tells me at current commodity prices that their free cash flow will grow for the next 5 years, at 40% compounded annually. That's astonishing. That's a wonderful, wonderful, wonderful number.
Yeah, that is incredible. I think Wheaton Precious Metals is like 10% over the next 5 years or something. So to put that into perspective, that's parabolic. Okay. Also on the royalty and streaming, Metalla Royalty and Nova Royalty have now combined. What insight do you have into those two?
I think that was always going to happen. Okay. Both of them were created from whole cloth. In both cases, the CEO, Brett Heath, and his partner, E.B. Tucker, used capital markets, frankly, did a wonderful job building two small companies from scratch. They understand the advantages of scale. Larger market caps and more trading liquidity means that you are closer to inclusion on an index, which means that you're closer to getting index buying. Increased liquidity, increased share prices lowers your cost of capital. I was no longer a shareholder of either company because from my point of view, they both traded at prices that exceeded what I was willing to pay for them. Hats off to them. They did a wonderful job of lowering their cost of capital. They did a wonderful job of creating critical mass. Now they're taking the critical mass creation to a different level by merging the two companies and increasing the trading liquidity. They lower the length of time before they begin to enjoy the benefits of inclusion in the various indexes, microcaps, which will allow them to enjoy forced ETF buying.
Okay. Okay. There are there deposits kind of short-lived, I guess. I think their average mine life is about 20 years. Is that a ballpark you're comfortable with? Or
Metalla was formed around a very short mine life project, which enabled them to establish a dividend, which I would argue caused the stock to trade substantially in excess of its net present value. People bought it for the yield, not understanding that the yield was short term. The partners did a very good job using that high share price, that low cost of capital, to acquire other companies and to acquire other real royalties, backfilling value, as it were. I'm not familiar any longer with what the median prospective mine life is at either company because I haven't been a shareholder for some time.
Yeah. Okay. You just don't follow it. Okay. A little bit more macro view here. What is your favorite commodity opportunity right now?
Uranium.
Okay.
I used to say in your show that a bull market was inevitable. Now it's imminent, a very different word. I would suggest that we're in the bull market. We're out of the stealth bull market phase. We're in the real part of the bull market. I say that for several reasons. One, as an example, a year ago, the shares of the Sprott Physical Uranium Trust were selling at a 12 to 14% discount to net asset value, which is to say, despite the fact that there was spectacular value in uranium, the market didn't recognize it. Now they're trading effectively at par, which means that investor sentiment in North America around uranium is beginning to reflect the increase in the uranium price from $50 to $60 at spot and more in the term market. When the Sprott product goes into surplus position, which is to say, when they begin to trade at a premium to NAV, which I suspect will happen shortly, what you will see is that Sprott will activate the at-the-market financing mechanism, meaning that new money that goes into the trust will go into buying physical pounds of uranium, a very virtuous circle. At the same time, over the last 12 months, the share prices of uranium companies have got a bid, led by, of course, Cameco, which is trading at multi-year highs. But the benefit has really cascaded down to our whole portfolio. The shares of Boss are doing well. The shares of Yellowcake are doing well. The shares of NextGen and Fission are doing well. We aren't in a stealth bull market for uranium anymore. We're in a real bull market for uranium. You know my favorite old cheap quote, a bull market for uranium is an explosive event. And at some point in time, I don't think that investors will benefit to the same extent that we all benefited in the 2000 to 2006 bull market. I think that the attractiveness of uranium as an investment theme will be played out in the market sooner rather than later.
Yeah. Now we've had such a run up. We actually finally went to premium on Spot yesterday.
Great.
And the spot price right now, according to John Quakes on Twitter, was 66.50 and climbing. Our kind of idiot proof begin to contemplate exit strategy is around $80 a pound. And I guess I always kind of figured it would take a couple years to get there, but at the rate we're going, maybe. Do you see a pullback coming, or are we?
Steve, I'm not that smart.
Okay.
I'm really not that smart. The incentive price for new uranium production is probably $75 a pound. It's worthy to note that when you reach the incentive price, you don't in the near term incent production because it takes the stuff a long time to come to market, which means that the uranium price frequently exceeds the incentive price and exceeds that incentive price by a fairly wide margin. When people then look at the development companies in uranium, they don't do net present value calculations based on $50 anymore. They do that net present value calculation based on $75 or $80. Which has an absolutely dramatic impact on prospective net present values and hence share prices. If you will allow me, this won't happen again, but I want to define the order of magnitude. When I got involved in the uranium market in 1998, there were 5 juniors in the uranium space, 5 people that had survived a 20-year bear market. The worst performing of those stocks over the next 8 years, the worst performing of the 5 was up 22 to 1. The best, Paladin, was up, if my memory serves me well, 10,000 to 1. I'm trying to do the math from 1 penny to $10 in 8 years. I don't know what percentage the gain that is actually. I can't calculate it that quickly. I'm not suggesting that this time through, those gains are going to be as dramatic. Remember then that the uranium price increased from $8 a pound to $140 a pound. What I'm merely suggesting is 2 things: the exponential increase in share price that you can get from an increase in the commodity price when you can't bring new production online quickly, and the advantage you have when generalist money comes into a sector like uranium, or, by the way, junior silver stocks, where the market capitalization of the sector isn't sufficient to hold the capital that comes into the sector. That's precisely the circumstance that I think will happen sooner rather than later in uranium.
Yeah, we had 12% of the model portfolio in uranium, and now I haven't done the math yet, but it's probably up to 15 or something. And I'm really wishing I had bet more during those 18 months when it was just boring and we were dollar cost averaging. But
Steve, remember, contrarian or victim, the choice is yours.
That was great. Okay, so we've pretty much gone as a general. Do you see uranium as being fairly valued now? Do you think? I remember back when November 2021, you were saying uranium's getting pretty ahead of itself right now. Are we getting ahead of ourselves here?
Not at all. Not at all. The uranium price isn't ahead of itself. I'm not saying that the uranium price can't pull back. My understanding from extensive discussions with industry experts is that the incentive price for existing production on a global basis is about $60 a pound. At $60 a pound, Kazatomprom and Cameco can, as an example, sign enough long-term contracts that they can put their mothballed mines back into production and ensure a more than adequate return for shareholders. But if you have a development deposit, which is to say a deposit that you're not putting back into production, but really establishing, you require $75 a pound, not just to cover cash costs, but also to cover your cost of capital and, importantly, your social rents. So you have a situation where the spot price has to go from 65 to 75, and there has to be enough volume, not in the spot market, but rather in the term market, that producers can establish a forward sales profile that allows them to raise the debt required to put these mines in production. After they do that, it takes them 5, 6, 10 years to permit them, finance them, and build them. So the $75 price in and of itself doesn't increase production in the near term. It only increases certainty of supply a decade out.
Wow. Okay. Yeah. All right. Lucian from the Triangle Investor. You were on a show a month
Wonderful
or two ago.
guy.
Yes.
Wonderful guy.
He wants to know, since you're retired now and looking for more stuff to do, would Rick be interested to take a board seat of some uranium company involved directly in managing that kind of company?
There is nothing in the world that I am less inclined to do than go on the board of a public company again. I enjoyed my time on the Sprott board. I think I made a real contribution. By the way, I owned and still own more than 10% of the shares of Sprott. Towards the end of my time employed on the Sprott board, I came to refer to board meetings as being spelled B-O-R-E-D. When I understood that the process was by now boring for me and high risk, I vowed never to go on a public company board again. I am on the board of Battle Bank, an organization, note, a private company. I am on the board of a nonprofit, Students for Liberty, notice, not a public company. As soon as my job in both of those organizations is done, I will drop off those boards, never to disgrace another one.
I think that's a no, Lucian. Okay. All right. couple more things on uranium, and then we'll move on. It's okay as far as uranium. So when we kind of get in this cycle, the safest bet is the Sprott Physical Uranium Trust, the commodity itself.
Right.
And then if you're to branch out and play a little more beta and you want a little more upside, URNM. Do you think that we're kind of at the point of the cycle now where, let's say we stick with the program and 75% of the portfolio is the beta plays like Cameco, Kazatomprom, things like that, the Sprott Physical Uranium Trust, and 25% are, things like Next Gen, Denison, UEC, companies like that. Do you think that it would be prudent to maybe in a little bit more of a beta play to swap some URNM for like URNJ to play a little bit more of the alpha?
No.
Okay.
I have now graded in excess of 80,000 portfolios in 6 years. And while I hope I've taught 80,000 people something about portfolio allocation, I've learned an awful lot by looking at portfolios. Most investors follow the dictum, got a hunch, bet a bunch. They don't understand the risks and they don't understand the relative merits of the companies, particularly the microcap companies that they invest in. Some investors, as a consequence of the fact that they understand that they don't know enough themselves, don't invest at all. In other words, they miss the alpha and they miss the beta. I think it's a mistake for natural resource investors who can take some risk to miss uranium. But for the vast majority of investors, the vast majority of investors, capturing the beta is all they need to do. Capturing the beta can be as simple as buying URNM and Sprott Physical Uranium. For probably 80% of the investors and speculators who I have come across in the space, doing that, capturing the market beta, and then going on with their lives, enjoying their lives, working their jobs, investing in areas that they know better is a better thing to do. For those people who are deeply involved and deeply interested, for those people who are willing to spend an hour a month on every position in their portfolio, those people could and should take more risk to generate alpha, but only those people. I would suggest that of the 80,000 portfolios I've graded, those are 80,000 people that are more interested than most of the world in natural resources. And out of that self-selected bunch, I suspect that at least 75% should confine their activities to to beta around natural resources rather than alpha, because they are either unable or unwilling to do the work to assess the risk to chase alpha.
Okay. Good to know. All right. Moving on to natural gas. How do you see natural gas doing in the U.S. and Canada?
Depends on the time frame that you give me. Natural gas has done well in Canada as a consequence of the fact that they can actually sell it finally. So the stocks that we talked about on your show last year, particularly Peyto and Birchcliff, have done well. I mean, they've accomplished 4 years of gains in 1 year. The U.S. natural gas industry continues to be mired in the oversupply associated with byproduct gas from wells in tight formation in places like the Permian. We have a circumstance now where there is so much associated gas being produced as a consequence of drilling liquids or oil wells that the U.S. market is in temporary oversupply. But that temporary oversupply is setting the stage for a massive market shift. We are building infrastructure around natural gas in the United States like mad. Gathering infrastructure, transmission infrastructure, chemical infrastructure using natural gas as a feedstock, liquefied natural gas exports. I don't think that 2023 or 2024 are going to be good years for natural gas. But as you recently learned in your uranium portfolio, if you don't advance with an 18 to 24-month time frame, you leave an awful lot of money on the table. American investors who think that they're going to be consumers in 2025 and 2026 might want to do their personal balance sheets a favor by investing in American natural gas, where the future is certain. in anticipation of an inevitable return.
Yeah, kind of like we see copper over the next 5 years. What's an easy beta play? Dividend.
I would say the easiest beta plays, concentrated plays in natural gas, are probably Equitable for the Marcellus in the northeast of the United States, and Devon in the mid-continent.
Okay.
I suspect that both of those stocks will triple or better in the 3 to 5 year time frame. Both of them will pay you handsome dividends while you wait. So in terms of time value of money, you don't have a time value of money risk because you're getting rent on your money.
Yeah.
I don't think that you need to come down into the game of your names, because I think those two great big powerhouses are depressed enough and will rebound. I'm being modest when I say rebound handsomely.
Okay. They're the BHP and Rio Tinto of their class.
Of the domestic gas producers, yeah.
Okay. Randall Box and Pete and several other people I can't remember asked, have you done an update on Arizona Metals?
I have not completed an update on Arizona Metals, but we're very close, both on Arizona and Arizona Sonora.
Okay.
By the way, while we're doing it now, we have to do some work on Ivanhoe Electric. There are at least 3 developing Arizona copper deposits.
Okay. Yeah, that was another question, so we can cross that one off. Okay. Danny wants to know about, after having watched the Rule Classroom on Abra Silver, what he made of John's answers and if Rick updated his rating in Abra.
Abra Silver, I haven't updated my ratings on. I want to see the results of the drilling on the high-grade zone. I am certainly impressed with the company's ability to answer questions from the format of the Rule Classroom. In other words, the answers that they gave were not obfuscatory. They understood very well the concept of answering unanswered questions. They understood the concept of the fact that the investment thesis should be founded on ground truths, not merely what is convenient for them. And I think the proposal to test the thesis was well thought out. I continue to be a bit concerned with the overall grade. I'm less concerned now with the infrastructure, given the fact that they helped me understand the other mining activities going on in the Salta Altiplano, the fact that natural gas is going in there, that power is going in there, that roads exist, that the whole infrastructure of that Altiplano was driven first, of course, by the Lindero gold mine, but now by the exploding lithium industry up there. So I'm much less concerned than I used to be about building a mine at 4,000 meters in the middle of nowhere, because it's no longer in the middle of nowhere. And I'm also coming to understand, as a consequence of the now operational success of Lindero after a very troubled start, about the fact that precious metals extraction via heap leaching can take place at that altitude in that terrain.
Okay. We got a lot of questions on gold and silver companies in Mexico. So maybe to kind of capture everyone's, what's your thoughts on recent changes in the political atmosphere around Mexico and mining?
Mexico, you have a trade-off between wonderful geology and spectacular human resources. There's a deep mining culture in Mexico, and Mexican underground miners are some of the best in the world. If you look, as an example, at underground mines in the United States, the predominant complexion is brown. Mm-hmm. So you have that wonderful mining tradition, wonderful, hardworking, knowledgeable people, wonderful geology, and abysmal politics. And the politics and the sociology are getting worse. AMLO, the nickname for the president of Mexico, mercifully, he's leaving, but he will be replaced by someone likely of his ilk. AMLO is a nationalist, socialist. The idea that somebody other than the Mexican government and their apparatchiks should make money, I think has been an anathema to him. I think the same genius that wrecked the Mexican oil industry is at work on the fringes of the Mexican mining industry. I don't think they'll be successful, by the way. I think the miners will persevere. But I note that AMLO signals his intention to the mining industry by putting the former environment minister in charge of mining. So what you have to do when you invest in Mexico is invest in a company where the geology is so superb and where the operators are so superb that they can overcome provincial and federal politics. It's true, too, in West Mexico, in particular, in the Mexican Cordillera, and to some extent in central Mexico in the Silver Belt, that the sociology is deteriorating, which is to say that in some aspects, Mexico is becoming literally a narco state. Sidebar, that can be good or bad. Informally, you can deal with a government that provides benefit for the taxes that you pay. And there are some mining companies, I'll probably not name them, who've done a relatively good job negotiating local arrangements with local power structures. And the local power structures in West and Central Mexico are almost always narcotraficantes. But from an outside investor's point of view, understanding that dynamic is very difficult. I can't just go down to Sinaloa and arrange an interview with a local boss to figure out how he or she perceives mining on a local basis in the Sierra Madre.
Okay. Yeah, I've always believed that if you want to screw up a good business, get government involved. They'll streamline that process for you. Okay, Wolfgang and Rick Fool want to know about hot chili.
I have been adding to my position in hot chili. I don't think they're past the point of no concern. They have to raise an awful lot of capital, and the grade in the deposit remains distressingly low. They have done a good job consolidating the district, first of all. The job is just about done. And there's lots and lots and lots of exploration upside. What they need to do is, as they continue to drill and delineate these projects, work more on a high-grade starter pit. The truth is that I believe that they have critical mass to make 0.5% copper work, which is their overall grade. By the way, in line with the worldwide mine grades. But I'd like to see them with some fairly near surface 0.75% or 1% copper. It's pretty obvious to me that kicking this thing off is going to require $1 billion investment. And getting a 25% return on capital employed and a less than 3.5 year payback is going to require a high-grade starter pit. I think they're going to get it, although I haven't seen it. And the consequences of that is that hot chili is probably my copper optionality alpha play, my favorite one. Okay. I also have a lot of time for the CEO, Christian Easterday, who is one of the most innovative, toughest young mining CEOs that I know.
Okay. All right. To get through these, I think we're going to have to enter the lightning round. Rick, you ready?
Yep.
Okay. What number do you give hot chili?
I've upgraded hot chili to a 4.
Okay. All right. So caveat here, your rankings are a snapshot in time. Right. Don't take these as good for 3 months. All right, here we go. SilverCrest.
SilverCrest I have as a 5. I was very disappointed in the reserve and resource report. I'm pleased with the on time, on budget completion of their capital project.
Okay. And SeaBridge.
SeaBridge I have as a 5. Could be upgraded, could be downgraded. People who want leverage to gold need look no further than SeaBridge. But understand this is a $6 or $7 billion capital project, and $6 to $7 billion is hard to come by in this gold price environment.
Okay.
You own this for leverage.
All right. Copper too. Woodside Energy.
Woodside Energy I have as a 4. I see Woodside as a approaching super major. The risk really is labor unrest in Western Australia, as is evidenced by the Western Australian strike against Woodside's neighbor, Chevron.
Equinox Gold.
I'm crossing myself. I have Equinox as a 4, looking to an upgrade as a 3. Equinox is way oversold as a consequence of the market's concern over their Ontario mine build, a $1.25 billion mine build. I am repeatedly assured that this is on time, on budget, which will be the first time in Canadian history that a low-grade Canadian Shield mine has been placed on time, on budget. If that happens, in other words, if they achieve nameplate capacity in the first quarter 2024, which I expect they will, the stock will, I think, at a minimum double, even with no increase in the gold price. If they don't, I'll have egg on my face.
Okay. Sibanye Stillwater.
Sibanye Stillwater, I've suspended coverage on. We are trying to understand more about the dynamics of their South African operations. Certainly, they're doing well in the Stillwater complex in the United States, but they're very, very, very leveraged to higher platinum and palladium or gold prices, and I'm not sure we're going to see them. They have some operating difficulties that I'd like to see them work through.
Okay. Power Metals.
Power Metals is not for the faint of heart. This is a very small company, and you're invested in process. I have Power Metals as a 5, although I think I'm the largest shareholder of the company. It's an appropriate risk for me, for somebody who does a lot of work and can understand the process of merchant banking, which is the business that they're in.
Okay. Endeavor Silver.
Endeavor Silver, I don't own. I have it as a 6. I think they've done a good job operationally, and they've done a good job acquiring deposits and putting them into production. I note that it really is a collection of tier 2 deposits, and I'm not in favor of 2-tier deposits, and they are, of course, very exposed to Mexican social and political risk.
Yeah. Sovereign Metals.
Sovereign Metals is another one. It's not for the faint of heart. I own a lot of Sovereign Metals. I'm buying Sovereign Metals. Sovereign Metals, for those of you who don't know, is an enormous rutile and graphite deposit in Malawi, a country that doesn't have much of a mining history. It's a deposit that I don't understand particularly well in terms of metallurgy and process, although I'm spending some money to come to understand it. This deposit is probably the largest and highest grade rutile deposit in the world, with graphite, if you will, as the icing on the cake. If it works, this is truly a tier 1 deposit, which is to say, this is a deposit that will set the economics for the commodities that it produces. Notice that I said, if it works. It's in a remote part of Malawi, a country that doesn't have good infrastructure, industrial infrastructure, or mining infrastructure, or power infrastructure to begin with. And it's a deposit where the process technology and the access to market has not been proven. So there's a lot of risks. If they de-risk it, despite a rather large market cap for a junior, this is a 10-bagger or a 15-bagger. Once again, remember that I qualified it by using the word if.
Yeah. Denison Mines.
Denison Mines, I think, is not a 10-bagger, but I think it's almost a no-brainer. We're talking about 2 advanced discoveries in the Athabasca Basin, which is in effect the Persian Gulf of uranium, and a permitted and operating mill. The big question around Denison, I think, is does their underground in situ leach technology, where they can extract uranium from sandstones deep in the earth without having to mine the sandstones, does that technology work? If that technology works, and I'm not saying it will, I don't understand it personally. If that technology works, this thing could be a long ball home run.
Yeah, that's what we're hoping. Okay, Uranium Energy Corporation.
Uranium Energy Corporation is becoming reasonably well priced. This is another one, an Amir Adnani company that got way ahead of itself because of Amir Adnani's ability to spend financial public relations money intelligently. The money that he raised at what I consider to be elevated prices was invested extremely, extremely intelligently, allowing Amir to backfill value at UEC. I suspect that UEC will be the surprise stealth beneficiary of this bull market. The expectations for uranium energy got way, way, way ahead of themselves. in 2020. And the consequence of that is that people often lost 50 or 60% of the money that they had invested in uranium energy and now regard the stock as a dog. The fact that it fell in price at the same time that they improved the company markedly through acquisitions means that people who are holding against a mirror the fact that they paid too much for the stock are going to get the stock wrong not once, but twice.
A 5?
I'm sorry?
5?
I have uranium energy at a 4.
4. Oh, okay. Uranium Royalty Corporation.
Uranium Royalty Corporation, I have it as a 4. Pardon me, as a 5. I like the concept. I like the people. The fact is that they haven't yet acquired enough uranium royalties or streams that I can adequately value the company.
Okay. All right. And rounding it out, what is the most standard uranium?
Standard uranium, I don't know enough about to comment.
Okay. One last one then. Tellurian?
Tellurian, similarly, I don't know enough about it to comment.
Okay, cool. Right on. Well, thank you, Rick. This has been a lot of fun. Any closing thoughts? Closing thoughts? We got your royalty and streaming boot camp coming up. There'll be a link down in the show notes. Any final thoughts?
Yeah, a couple final thoughts. The first is those of you who haven't had your natural resource portfolio ranked by me should do it. It's free and there's no obligation. Go to ruleinvestmentmedia.com, list your natural resource stocks. Please, no tech stocks. Please, no pot stocks. Please, no crypto. I'll rank them 1 to 10, 1 being best, 10 being worst, and I'll comment on individual issues where I think my comments have value. Second, another free service. Go to the Rule Classroom. The Rule Classroom will ultimately be 60 lessons on natural resource investing by me for free. This will give you the framework to do the securities analysis necessary to be a successful natural resource investor. While you're at the Rule Classroom, understand that we will from time to time interview companies where I will employ the lessons learned in the Rule Classroom on these companies, a wonderful learning experience and a way to make money in natural resources. Use the lessons in the Rule Classroom when you attend the boot camps, the product-specific boot camps, and when you attend the Rule Symposium on Natural Resources, our grand physical conference, which we have every year. So by all means, get your portfolio ranked. That's a start. Use the resources of the Rule Classroom. It's absolutely positively free. And if I do say so myself, it's an absolutely amazing tool, even if I charge for it, but I'm not charging for it. Use the classroom to its fullest potential. Go to the Q&A sessions there. Go to the company briefings that are there. All of this is free, and all of it is marvelously useful. Finally, if you aren't comfortable with your current bank, remember that I'm part of a bank in organization, Battle Bank, a bank that will pay you high interest on your savings and checking, a bank that will allow you to save and invest in 22 currencies, not just the US dollar, a bank that will loan against your precious metals holdings, a bank that will establish IRAs that allow you to buy single-family residential duplexes or fourplexes in your IRA and operate them yourself. Battle Bank believes your money is just that, your money. If you're unhappy with your bank, check out Battle Bank, or at Rule Investment Media in the question and comment section in the rankings database, simply write bank, and we'll send you information about Battle Bank.
Awesome. Thank you very much, Rick. Look forward to the boot camp and keep putting out those classroom videos. We're sucking them up like hotcakes. And thank you for tuning in. Support the show. Hit the like and the subscribe, and we will talk to you next time.
Thank you, Steve.